Welcome back to Investing with Confidence. I am your host, Joshua David, and we are talking about the do's, the don'ts, the financial markets, how they work, and how supply and demand actually moves the markets. When there's more demand, price goes up. When there's more supply, supply goes down. And we talked about that in the first segment here. And if you happen to miss 2 tickets for that investing class right here on Bloomington, call 888-682-6466. That's 888-682-6466. You can also text the word invest to the number 484848. When you get registered for this investing class, you're going to receive a quick start kit, which actually includes some free stock picks. Now, that's a bargain there, Al. With the stock market moving so well right now, great volatility. It's just some ideas to help our listeners hopefully make smart investing decisions. And Al, we talk a lot about stocks on this show. And there's a couple that I know you wanted to get into here today. And as you mentioned in the first segment, we have earnings season now. And Airbnb, a great, I would say it's a decent company out there, but it's kind of been at Valley Fair on a roller coaster. Back in 2021, started out around $130 a share, went up to $218 a share in February 21. Back down to 130 in May, back up to 210 in November, back down to 130 in January, and now we're rolling back up and coasting back up to about $185 a share. So this has really been a roller coaster. And I think a lot of investors that have just been holding this stock have had a lot of emotions.
Right.
Now, what's your insight on Airbnb as far as the stock? We know the stock price has been very volatile, big highs, low lows, but explain why, when you understand core strategy and supply and demand, how the markets actually function, there are different ways to potentially take part in both directions.
Well, there are. The market doesn't just go up, it goes down, and occasionally it goes sideways. And there are opportunities in all 3 directions. And when you think about it, the way that you become successful at anything you do is put the odds in your favor of things working your way. Would you have a better chance of being successful if you only had 1 out of 3 chances to do something, or 3 out of 3? And obviously the answer is 3 out of 3. That's what we show our students, how to take advantage of these different moves. A company like Airbnb, that's rental property company, and that industry, that market has had a lot of fluctuations kind of based on what's happening with COVID. People now, I think, are just tired of letting COVID control their lives, so they're getting out more. I think that's one of the reasons that we've seen an increase in Airbnb's numbers and why the stock is moving up. But you mentioned the roller coaster. A lot of people, the majority of the people, and probably the majority of the people listening to the show if you're in the market, you are in the market with a strategy that only will benefit you if in one direction. That's typically up, because you're buying, you're going long. And you are told to just hold on to it. Don't worry about these fluctuations. Well, it's pretty tough stress-wise to not let that bother you when you see something go up 3, 4, 5% and then down 3, 4, 5% and then back up and down. Well, every time that happens, for people that are looking at generating income, in other words, shorter-term cash, those are opportunities. And in a chart of a company like Airbnb or whatever the stock is, whatever the asset is, there are stories being told and ways for you to identify with a high degree of accuracy what's going to happen basically in the future. And it's based on what the institutions show us on a price chart. The great thing about our strategy, Josh, which really is based on that supply and demand, is that you use the same strategy no matter what you're trading. So if you're a stock trader, you use the same core strategy, the same steps. If you're trading options, you do the same thing. Futures, the same thing. Forex, the same thing. Crypto, the same thing. So it really simplifies things, and there's so much fluff out there. There's so much information that is really of limited to no value that people are using. We want to cut that out and just really concentrate on what's factual.
Did you say there's so much fluff out there?
I used the word fluff.
I guess it is. That's what we do on the radio here. But Al, I was in construction for many years. And
they don't use the word fluff in construction.
Oh, you did not. There was other words that we will not talk about on the radio. But in construction, you have a blueprint on what you're looking to accomplish, whether it's looking at building a home, or maybe it's doing some site development, building some roads, bridges, ponds, stuff like that. And you had to read that blueprint, and then you had to follow the blueprint for that to work. And then, as you were talking about, that's very similar to price charts. You're actually just reading a price chart.
Exactly.
Like you said, it's kind of like a story. It's telling you what's happening and then what to do next. But you have to have the odds in your favor, like you said right away, right out the gate. Odds in your favor, low risk, high reward, high probability entry points in the markets. And that's typically at a near a turn in price.
Correct.
Whether it's going up or it's going down. And I want you to kind of talk a little bit about what shorting means coming up here next in the next part here. But we have a lot of listeners that are kind of in that buy and hold strategy and just kind of confused, because if you look at it now, the majority of the stocks in the S&P 500 are actually down.
That's correct.
So that buy and hold strategy might be a thing of the past, and we know it's been a thing of the past for several years. But I think our trader investor listeners now are probably seeing that on their accounts. Right. So if you want to learn more about how to read a price chart, basically how to read where stocks could potentially be going before they happen and make smart investing decisions, you got to come to one of these investing classes that Al teaches right here in Bloomington and shows how that's done, what that looks like on a price chart, how to identify those different areas of interest where you might want to be a buyer or a seller, and hopefully making smart investing decisions and doing that with confidence. We do these classes right here in Bloomington. They're free. They're about 2 hours. Call 888-682-6466 for 2 tickets. When you call right now, so you got to call right now, you're going to receive tickets plus the Quick Start Kit, which has some free stock picks. I mean, we talked about a lot of the stocks are actually down right now. Potential buying opportunities, but you have to know where and when to do that. Call 888-682-6466. You'll receive those stock picks when you do that. You can also text the word INVEST to the number 484848. So with Airbnb, I just want to mention, it has been going up since the earnings report, actually since about roughly about the 27th or 28th of January, and it's coming into a potential area of supply. Now, that could potentially turn price back down, going back to that $130 mark where it's been several times. But then again, we are on, it's like a locomotive going all the way up to that about a $200 and something mark. So it's just making the right decision, but putting low risk, high reward, high probability entry points into that market. And I wanted you to explain real quick what it meant to what the concept is of profiting in down markets. I don't want to, don't go deep into the weeds here, but just explain that, okay, it's possible to benefit in down markets, because I think a lot of our listeners are probably thinking, okay, if they hold stocks right now, a lot of them are down. The market has been down the past 4, 5, 6 weeks. We're down, I think, roughly 6 to 10%, depending on when you listen to the show here. So we have some concern in the markets. Like you mentioned in the beginning of the show, Russia and all these different things that are happening could be catalysts to down markets. So explain to our listeners why down markets are actually a great, fantastic thing.
Well, if you can make money in a down market, it is exactly the same money that you make in an up market. It's those green things with pictures of basically dead presidents on them. But that's making money in a down market, having the opportunity to benefit in a down market is really critical if you want to try to achieve the full potential that you have in these markets. And the reason is that when the market goes down, it goes down about 3 times faster than it goes up. And a big part of that is because of the emotions, the psychological part of the market, and that's the emotions and the psychology of the public. And they're the ones that really kind of exacerbate the move, whether it's up or down. So if the market is going to go down, it has been going down, it will always go through those ups and down movements. Wouldn't it be to your benefit to be able to identify the way to participate beneficially to your portfolios if it goes down? Shorting is one way of doing that. You might have heard of people shorting the market or shorting assets. We talk about that in these classes. It's basically the opposite of what you would typically do. Typically, you buy something at a low price, you sell it at a high price. With shorting, you're selling something at a high price, buying it back at a low price. And we'll go into details on that in the class, but that's only one way of benefiting in a down market. There are other ways too, and we go over those in these classes. So basically, everybody listening has the opportunity, whether you have an investment account or you have an IRA, to benefit in a down market. And we'll talk about those in these classes.
That being said, you had a stock that you wanted to talk about, and we talked about it last week. It's
Right.
Roblox.
Mm-hmm.
And I think a lot of our listeners probably started hearing about this stock back in November, end of November, and the beginning of December, right?
Right.
After the price moved up, soared up to about $140 per share. Well, we had earnings yesterday,
Mm-hmm.
or actually, no, it was Wednesday, I believe, or Tuesday, I believe it was.
Yeah. Tuesday. That's
After
correct.
close.
Right, after the close.
And so after that earnings report, it was actually red, bad earnings for Roblox,
Mm-hmm.
and dropped 25%
Yep.
overnight. Now,
Ouch.
yeah, I wish we had a sound effect for that. But it's now off those highs, it's down roughly about 60%. So a lot of investors probably got into Roblox after the price went up, and now they're actually in a negative position, but they're holding on for dear life.
Right.
Now, why is it such a great thing when you understand markets that you can profit in up markets and down markets? How do you really build that confidence to make those decisions?
Well, first of all, it's getting the knowledge and understanding what moves the price of something, who moves the price of it, and how do you identify who that is, where they are. Actually, you don't have to know who it is, but you have to know where they are making those moves. It's basically just following the people that are successful out there, what we call the smart money. What happened to Roblox, the big move up was caused by an agreement they had with the NFL to do some projects with the NFL. Well, then earnings came out, and I've said this numerous times over the last few months that a lot of these companies, especially the growth companies and technology companies, have become so highly overvalued that they really have to prove their worth. And if there's anything negative, then they get spanked. Anything negative that happens, they get spanked, and that's what happened to Roblox. There's weird things happening in this market, and it's not normal, which I think is a reason to maybe be a little concerned if you don't have the right education, the right knowledge to benefit in different directions. And just go back to Facebook. When Facebook can't remember exactly what the date was, but in one day it lost over $200 billion in valuation. That's the biggest one-day loss in market history.
Yeah.
Amazon from November to January went from 37.63 down to 27.07. That's over $1,000 drop in one share per share.
Facebook actually was at about $325 per share, dropped down to about $240 per share. But I think a lot of listeners, they're just not. It's not normal for them to see down markets because we've had an up market for so long.
Right.
I'm telling you right now.
Yep.
Now is the time to prepare for whichever way this market goes. Because if you have a plan, you're prepared for up markets. You're prepared for down markets. Do you really even care which way the market goes?
We don't care.
That's exactly right. So I hope our listeners understand that markets up is good, markets down is good, but learn the skills and techniques to actually take advantage of that. Learn the skills to have income strategies in up markets, but also the skills to have income strategies in those beautiful down markets. And now we have, in the investing classes, we actually have 2 hours to kind of explain to you what that really looks like, how that functions. That way, if you're brand new to the markets, which I would say the majority of people that come to these classes are brand new to the markets, that's a perfect thing because we can teach you from the bottom up. Don't just go try to figure this out on your own. That's just a case for disaster that way. So call let's text the word invest to the number 484848 for 2 tickets for the investing class right here in Bloomington. When you get set up, you're going to receive some free stock picks that's within a quick start kit. If you like to call 888-682-6466, but you got to call right now for those 2 tickets for the investing class, also the free stock picks. Al, coming up next, I want to continue this discussion about the markets. We're seeing some wild moves. We talked about the majority of stocks in the S&P 500 are actually down. Let's talk to our listeners and explain how these markets it doesn't matter which way it goes, and just so we're comfortable making the right investing decisions. We'll be right back.